Welcome, everyone, to Scale Lab, brought to you by TechLeap. I'm Joe Wilson, your co-host, and I'm here once again, with my partner in podcast, the venerable Constantijn. And we are going to look at some pretty broad topics today, but I also think a pretty special guest, Constantijn. Why don't you help everybody understand what we're doing?
Thanks, Joe. Yes, with us today we have indeed a very special guest, the founder and CEO of Binance. CZ, can I call you CZ? Is that good?
Absolutely, yeah.
Okay. Of course. And we're going to explore really about how he developed this incredible company, and also to understand a bit about the scale of Binance, and also looking forward, really how this market is developing and how and sharing his vision. So let me just kick off with a question, just immediately diving deep in. Every startup probably thinks they do something unique and creating their 10x value because basically that's the only way they can survive. But Binance is a whole different story. I mean, you created a new market. You went into a space that nobody went before. So can you maybe help us understand a bit? How market creation works? We tend to see there's a kind of a chicken and egg situation. So who were the chickens and who were the eggs, and how do you manage to make an omelet?
Sure. Thanks for having me here. First of all, it's a great honor. To be very frank and to be realistic and humble, we actually didn't create the market. We were just a player in the market. Bitcoin was there from 2009-ish and became popular in 2011, 12. I got involved in Bitcoin in 2013. Binance started in 2017, when I would say the second wave of. In 2013 was the Bitcoin industry. In 2015, Ethereum became available, and then 2017 became pretty popular. And then there were ERC20 tokens, so anyone in the world can create their own tokens. We were one of the earliest token exchanges, so we caught on to that wave, and then we've grown very quickly from there. So I wouldn't say we created everything, but we also helped the industry grow. I do believe that. So we made it very easy for people to access those tokens. So we're part of the industry, but we wasn't the only one. But we recognized something quite early. The other thing is, doing a crypto exchange is not a new idea. More than half the people I meet in the crypto industry wanted to do a crypto exchange at one point or another. But I spent 17 years before Binance working on trading systems, etc. So I come from a more technical background, so I know that aspect really well. And then we got a couple other partners that were very strong on marketing, customer support, and then that was a magic combination that really worked well in hindsight. So yeah.
What then? Because this is a market that is evolving fast. There's a lot of also pushback. So trust is a massive issue, I guess. So how do you build something that grows so fast and in an environment that is where trust still needs to be established? How do you do that? And what was unique about Binance at the time that allowed you to grow so fast?
Yeah. So I think. Trust is one of the key pillars for, number one, our growth, and number two, our stability. So, but the factor for growth, I think, is actually mainly the globalness of blockchains. So those two things come together. Before Binance or before blockchain. Even if you look at the internet companies, most internet companies start in one country and then they move to the next country. Even Google probably started in the U.S. first, and then they developed Japan, then they went global. Uber, same thing. With blockchain companies, with blockchain crypto exchanges, we started as a crypto-to-crypto exchange, meaning people deposit Bitcoin via the blockchain and they can trade into Ethereum and then withdraw via the blockchain. Guess what? That works anywhere there's internet. It's no longer tied to a location. There's no concept of a boundary, and our product's quite simple in the sense that there's a green button to buy, there's a red button to sell. The rest is mostly just numbers. There's a withdrawal, there's a deposit thing. People use Google Translate. So it's quite easy for international users to use us. So I think we're one of the very few platforms, thanks to the blockchain technology, that grown in 180 countries from day one. So we launched our platform, and there was very high demand for trust. We launched our platform. We were very transparent. We were very open. My name's out there. we protected users very well at using at each major decision points, where many times it costs us a lot of money. But we made those decisions, we built trust. But then people all around the world knew, and that contributed to our fast growth globally. I think we're probably the very first organizations to grow in 180 countries like that simultaneously.
So if you think of the entrepreneurial lessons that are inside of that, right?
Yeah.
It's one thing of riding a wave. You give credit to Bitcoin where it's due, but it wasn't quite as purposeful as you. You guys had a plan and a structure and a purposeful thing. I'm curious, like, what were the kind of one or two big decisions you guys had to make early on to say, okay, now we're gonna, what are we have, 180 countries doesn't just go boom, it's all done. You had to make some decisions to get that to happen.
Yeah. So so I can give you some like really some very clear instances of some decisions that was at the time quite tricky. So for example, we started July 14th, 2017, so 5 years ago. And by September 4th that year, so a month and a half later, I was in Shanghai at the time, and a month and a half later, China issues a memo signed by 7 ministries saying that crypto exchanges are no longer allowed in China.
Right.
ICOs are no longer allowed in China. And anybody who's done an ICO, if the price is below the ICO price, they need to make the investors, they need to return the money to the investors. So this is 6 weeks into our launch. We just finished our
That
ICO.
wasn't in the business plan.
That was not even. So this is like, and we did an ICO in July. We raised $15 million equivalent in Bitcoin.
Right.
Luckily, we issued a coin called BNB. Right. So luckily, BNB at that point was already 6x the issuing price. So no one wants to return $6 for $1. Yeah. But we, as an exchange platform, we also helped facilitate 4 other ICOs on our platform. And actually, because of that news came out, all of those token price dropped. So those projects don't have enough money to make the investors whole. So we asked, like, how much do you have? And they said, this is how much we have. We calculated the difference for the users on our platform. The difference was $6 million. We had a very quick meeting. We said, should we use our money to cover that $6 million for other projects? Sure. It was a very quick meeting. I was actually on a train. My team calls me and says, okay, well, this is the situation. This is a suggestion. Should we do it? Like, sure, we do it. Like, it was like literally 10 minutes discussion. Till this day, that's the single largest spending in our corporate history, percentage-wise. Because we raised $15 million.
That's more than a third on one thing.
It's
so
like
in
40%.
some way, I mean, the Chinese decision cemented your customer base, right, at the time.
To be honest, yes. So at the time when
your quick entrepreneurial decision to bet quite a substantial amount of your capital on your clients.
Yeah. So So first, when the news first came out, like, everyone was worried about our survival, right? So it's bad. We worry about our survival, and then we're gonna spend $6 million out of this 15 that we just raised, and we're not profitable. We're still spending money to hire people, buy servers, and this is more than 40% of our treasury in one go. But we said this is the right thing to do. We protect our users. So we did that. Nobody did that before. Nobody did that after. And we were going to move our exchange international. So we're no longer going to be in China. And guess what? While all the other Chinese exchanges were shutting down, all of their users came to us. Not only that.
Because you were still alive?
We're still alive. And we got such overwhelming response from the communities. Like no other exchanges do this kind of thing to protect their users.
So in that decision, I mean, this is just, sorry, man. In that decision, you got 2 different things. One is it's the right thing to do. Yeah. That piece that's an easy path to take, I think, when you explain it looking back. But there's also you're in a nascent industry. You're in an early industry. It's like it's just getting started. Was part of that decision also someone's going to have to take the hit and we're going to have to make it work, something like that? Like to make this thing reality, we have to do something this big? Yeah, so it was actually, we didn't really calculate the size of it, the percentage. We just said, look, this is the right thing to do. Yeah. And can we take the hit? We could. And will it be the right thing to do? It is. So after we'd done it, we got such overwhelming responses that international users came to us. Right, so this news was covered very well in English international media. So that's one. Well, I mean, if you think about trust, that's big. So, and in the same month, later on, actually, just before that, Bitcoin was doing a fork. This is Bitcoin forking between Bitcoin Cash and Bitcoin.
Before that, what most exchanges, if you had your Bitcoin on the exchange and the exchange decides not to support Bitcoin Cash, you just don't get it. We said, well, no, because we hold your coins for you. If you after the fork, we'll give you the equivalent Bitcoin Cash in your account. We may or may not list it. Start trading it, but you can withdraw it if you want. When we did that, we're the first exchange to do that, and then the users actually deposited Bitcoin to our platform because they don't want to deal with the fork themselves.
Yeah.
There are other things like later on in that month, there are other coins that if you hold NEO, which is one of the top 10 coins back then, in your wallet, it generates another coin called gas. Both coins are worth money. Again, if you deposit NEO onto an exchange at that point, no exchanges give you gas. And that's it. The exchange wallet just gets more gas and they just keep it. We found out through a account reconciliation, because we do this reconciliations all the time. We're getting more and more of this gas coin. Where did it come from? We thought we have a bug. Bugs are not good when your balances don't match. But then we found out, okay, because we hold NEO and you can generate this gas coin. We said, well, that's not our money to generate this. So we should write a program to calculate how much people hold and distribute it to that to people. So we do a daily snapshot and then we distribute on a monthly basis. Again, we're the first ones to do that. So we protect our user interests. And guess what? All the NEO holders came to us. And back in 2017, NEO was a top 10 coin. People who hold NEO typically also hold Bitcoin, Ethereum. Most of their assets came to us. So we made 30, 40 of those type of decisions. Yeah.
But so those very early decisions that have clearly turned out successful, afterwards, they must have an impact on your culture as well. So, what is the lesson that you drew and your company at the time drew from those decisions?
So, the response was quite good actually. So, after the China incident. When the China incident happened, we had about 30,000 users, already pretty fast growing, but we were not profitable. A month after the China situation, we got to 120,000 users, and we become profitable. So now we're sustainable. We spent $6 million, but we're not a sustainable organization. Our growth went like that. So we learned that just got to protect our users. And then the rest of the value will come. We don't need to make money short term. So till today, our number one culture value inside the company is protect users. Just two words.
Yeah.
So, but it's not just something you say. You have to make some of the really tough decisions that matter. One last example.
Maybe dig into that. What are the toughest decisions and dilemmas that come from that value?
So, for example, very recently, maybe 3 or 4 months ago, where there was an airdrop on a coin. We have to distribute to our users, and we listed so it's trading stars. The program to distribute the tokens to the account holder, because we have 100 million users at that time. So the program runs longer. The trading started and it finished 12 minutes after that. So there's a portion of users who didn't get the balance, and they couldn't sell. And when we first listed, the price was high. 12 minutes later, the price dropped, and a bunch of users complained. Our customer support teams, okay, should we negotiate with the users a little bit? Some we can compensate, some we don't have to because they were not on their computers. And do we compensate 20%, 50%? What do we do? We said, well, is it our fault? And I said, well, yes, it is our fault because our program didn't finish in time. And we said, okay, then we should compensate. The guy says, well, it's going to cost us $28 million if we're going to compensate in full. I said, what's our principle? Our principle is protect our users. So the manager said, okay, that's clear. So
because the system couldn't instantly serve 100 million, it had to run across that because it's such a large amount. You had earlies and lates that came in, and then you decided to make them whole.
Yeah. So what we should have happened is wait for the program to finish and then list, and then we wouldn't have this problem. But due to the timing of things, we didn't coordinate that well. So that costed us $28 million recently. But today, $28 million is much smaller percentage-wise. So we have this culture where we do protect our users quite well, and the users are not dumb. The users are pretty smart. Today with social media, with it gets out. So I think the lesson there summarized would be you really have to care about your users, and it's just not just something you say. Like people learn from the decisions you do, and when you care about your users, many of the decisions will cost a lot of money. But in the long term, it also generates you a lot of value, a lot of goodwill. And when the users come to you and stay with you, then I think in today's business, after you reach critical mass, the longer users stay with you, the more valuable you are. The little money that you spend here and there is totally worth it.
Yeah, I mean, there's a little bit of a habit there you guys have built on capitalizing on the problems.
Yeah.
Like it's like there's a mistake that's been occurred. Can we take advantage of it in the market in a positive way? Let me translate culture into people, and sort of ask you, like, if you look at more of the early days, like when you were just getting started, how did you make decisions on people? It wasn't like you could go out and hire everybody who'd been in the industry for 10 years. So how did you choose who would be on the bus then?
Yeah, so to be honest, our founding team, we've converted one of the previous businesses called BJ Tech into Binance. Yeah. So we had a tech team there. I come from a technology background, and so there was guys who have worked with very closely. Our CTO in that company became CTO of Binance, and then I also have guys who are on that team who have worked with me for like 8-10 years at that point, through 3 different companies, etc. So I know them really well. I know they're very strong. So that tech side is actually easier for me, just because I come from this background. And then I knew I was weak on marketing, but our co-founder, CMO He Yi, she's very strong on marketing. So I had to convince her to join us. And it was expensive in terms of equity shares, but those are the situations where you need this talent and you need this person. She will bring a team. You just gotta muffle up and just do it. So it turned out really well. So at the time, she's she's working for one of the top internet companies in China. If you say the top 10 CMOs in China, she's probably one of them. If you say female, she's probably top 1. If you say under 30, she's probably the only one. So I had to carve out quite a decent chunk of equity and plus all the other stuff. But she joined. It was totally worth it. So at the beginning, don't be so tight on compensation, equity, etc. You can have I can retain 100% of zero. Yeah. It's not worth it. But at the same time, though, many founders do make a mistake of 3 equal splits, 33%. That usually becomes inefficient. So getting top talent is really important. So we're very lucky to have the core team of talent that was very strong, and they're all very committed. And even till we're 5 years in, all of them are still here. Mm-hmm. So we didn't have a lot of turnover, and we got more senior guys, more experienced guys from other places in, but we worked together. We didn't have a lot of high turnover from the founding team.
I'm curious what the difference is in how you made those choices then, because you're buying, if you will, or recruiting talent that is the balance of what you need in order to grow. Yeah. And now you're in a growth phase that's a little different. Do you make a different type of decision now for who you bring in, or is it still the same principles?
I think mostly it's the same principles. So at Binance, we like to hire people who are grassroots, more down to earth, more entrenched in the community, that knows what's going on without having reports or data. We have a lot of data now. We have a lot of data analysis, but we don't make a lot of decisions just by looking at data. We like to make decisions by just talking to our users. So we like that type of grassroots mentality, what we call guerrilla warfare, street smart type of mentality. Whereas we do hire people from all the established strong companies all the internet giants. Yeah. But we like to target the ones that can go all the way down to the ground floor. Yeah. That's feet on the ground. So that's the mentality we like to hire. And then those kind of mentalities typically work well with founder mentalities. The startup founders, they're all those type of mentalities. So far, it's been working okay, yeah.
Yeah. Maybe just can I cycle back to a comment you made? Not the say the 1/3. I mean, how do you if you have co-founders, typically you want to just share the pie before an external investor comes in. How did you go about this? Just in basically in how you shared equity.
Yeah. So especially for less experienced founders, they very often go for equal split among three, and then every decision they have to discuss.
Yeah.
Then decision cycles become slow. In a large organization, if you're running a multi-billion or trillion-dollar companies, then yeah, you want some level of stableness, and you want discussions on key decisions at a senior level. But when you're running a startup, you don't want three people to discuss decisions all the time. You just want to, like for example, that's $6 million, 40%. They discussed it for like half an hour, and they called me, and I said, yeah, let's go for it, and that was done. Right, so we didn't have to elaborate, debate, so that we can make decisions very quickly and move forward. If we make a wrong decision, we can backtrack. But
why is that linked to your equity share? I mean,
lines of authority, right?
Yes, lines of authority as well, right? You could separate the two out.
You could, but mentally, there's people attach share equity weight towards voting rights, etc. It's just, I think, it just mentally creates that. When you're small, having a leader that can make decisions quickly, having a clear escalation decision structure, I think helps a lot. When you get bigger, you want more and more consensus type of decision making. So we're kind of in that transition.
Yeah, right. And so you said you mentioned the word globalness, which I like. So you're starting a global company with a global customer base, but from the HR perspective, did you immediately start remotely, or did you have actually a local a venue, and then you grow out of that? And how does that work now? I mean, do you feel you're embedded somewhere? And how do you develop your culture going forward?
Yeah. So at the very beginning, we had a small office. Everyone was sitting there. We had 25 people, 30 people, and we didn't have to have meetings at all. Everybody knew what
you could see across the room, probably.
You just yell across the room, and everybody knows what's going on. We were forced to leave China, so we abandoned that office. I went to Japan. A few guys followed to Japan. Not everybody went to Japan. Some people went to other places. And we still have a small office. And then we left Japan. And then afterwards, we said, okay, no more office. Just work from anywhere. If anyone wants to get an office, they have a budget to get a WeWork. They can get a small office, a hot desk, and stuff like that. And then we actually found out working remotely didn't decrease productivity. We had users from 180 different countries, and our exchange never shuts down. It's 24/7, 350, never shuts down. So we actually need people to be online at different hours, and we can't always ask people to work at 3 a.m. shifts, etc. So we started hiring deliberately in different time zones. For many founders, this is difficult in some senses. Not to be too arrogant, but I come from I grew up in. I was born in China, grew up in Canada, worked in Tokyo, then New York. So I have a little bit of, and Canada is also an immigrant country where many different nationalities and ethnicities gets mixed together. So I like that type of international mix. This is why I like Singapore a lot as well. It's also kind of that international mix. But having that background and mentality for me makes it easier for me to hire people internationally. Luckily, our original founding team, they were also very open-minded. So even though some of their English is not very good, but they've improved very quickly. They spend time to learn English, and they work. So we are the most international in terms of people that we hire. There are pros and cons. Many people think that in-person meetings, face-to-face communications is more efficient. Yes and no sometimes. Working remotely gives us many advantages. This is way before COVID. Number one, we can hire the best talent all over the world. Anywhere. So people don't have to commute. In many cities, the traffic's bad. You waste 2 hours every day in traffic, and people are not sweaty when they get into the office. And we work very odd hours, right? So you gotta get on a call with somebody in Asia, somebody in Latin America at 9 p.m. at 11 a.m. Different time zones. So when we work remotely, we don't track people's working hours, so they can take the afternoon off, take the kids from school or do something with them. And then 9 p.m. they're back on the call. That's fine. That's perfect. So then there are more subtle things. When you work remotely, you can't micromanage people. So you have to manage by results. it's actually more efficient. It's actually much better. So we basically the remoteness force people to manage by actual results. It's no longer by how many hours, how close you're with your manager. None of that stuff. You don't socialize that much. So it's actually more efficient.
So you were performance-based quite early. Like some companies have to make a shift to that, but that sort of began by necessity.
We were performance-based very, very early on. So and the other subtle thing is that when you work remotely, people could slack off. They can slack off for half a day, a week, a month. But after a month or so, people tend to figure out this guy's not getting much done versus another guy. It's pretty transparent after a while. So the fact that it's easy for people to slack off makes it more obvious for who are doing it. And then we can bottom out those guys. So there's a lot of benefits to it. Now, COVID, everybody's more used to it, but we were doing this way before. There's plus and minuses. It's not just all good, but we leverage the good part of it quite strongly. And we build I think today when people come in, it takes them a little bit to get used to, but once they get used to it, everybody, if you ask like 99% of people in Binance, they said they cannot go back to office work.
No, I hear that too.
Once you get used to it, you can't go back.
On this global nature, there's the world is still not global. I mean, we're organized in regions and nations, and so running a global company in a whole new market, call it Web3, as it's emerging. How do you deal with the governance of that, and national governments obviously wanting to control what's happening in their geographies and jurisdictions? So how do you combine your global nature, your global staff, with all of that national, jurisdictions and geographies?
So there's a few different concepts here, which I typically do try to explain to our team and need to understand how we do things. The first thing is there are human-made concepts or labels, and they're fundamental ways of how we interact. So those two things are somewhat different. For example, country borders are human-made. Today you could be here, tomorrow you could be there, so you can move around, etc. They are but some of them have real implications.
And deep roots as well.
Yes, and deep roots, and they're enforced by legal, police, military, etc. And you just have to some rules you have to follow, but some of the rules maybe not. Like for example, the concept of a company is very virtual. Or the company doesn't exist anywhere. Is that the piece of paper that's on the registration? When people talk about headquarters, is that the office? Is that where the senior leadership is? It could be separate place. It could be separate, right? The senior leadership doesn't have to be in one big office. So you can some of the concept you can decouple, but company fundamentally is a group of people, what I call an organization, a group of people working together with certain commitments. You do the work, you get paid, you have bonus, you have some equity, ESOPs if that's ever realized. So those things are fundamental agreements and concepts that work. How you call it? Do you call it an ESOP plan? Do you call it an equity plan? Those are labels. So we distilled everything down to the fundamental interactions between humans. Say, look, you work for us, we can pay you, and we're a global organization. Okay, so now we want to get a license. Well, now all the regulators are looking at this, and we have to comply. We can't go against that flow. So we need to help the regulators. We need to help them understand our structure. So then let's register companies and apply for licenses. And that is we need to conform to the old labeling structure. That's fine. There's nothing wrong with it. It's just something that we need to understand. And then internally, like where we have certain guys working for us are employees of our company. Certain guys are consultants. We treat them the same. They're just we're just one organization, one team working together to a common goal. So once you separate those concepts, you can say, okay, yes, we need to be compliant. We need to have legal entities, structures, MLROs, responsible directors. We need to have all of that structure. That's fine. And we need to have internal processes, documentations, KYC, AML, sanctions, all this other stuff. Fine, we'll have all of that. But the the organization itself, we can be a little bit more flexible in terms of, okay, look, we have guys working for us in Brazil, we have guys working for us in some other place, and we can pay them in crypto if they're willing to take it, and they need to deal with the local tax issues. So we can decouple those things. So we are a very unique type of organization. Yeah.
You said you can decouple them, but it's really in that decoupling. Can you maybe take us to how you do that? Because we see many other companies. Also, we had on our podcast, we had GitLab, we had remote companies that are organizing this at a global scale. But what does it need to make this model work and evolve into maybe the dominant organizational form going forward?
Well, yeah. So I think again, it comes down to trust. So even if you sign an employment agreement, there may be some clauses that may disadvantage the employee, etc. You may get into lawsuits later on if you don't do performance management properly, etc. At the end of the day, the organization is a group of guys working together, hopefully on a common goal. Usually, at least the intent is on a common goal to push something, either it's a product, a platform, or an ecosystem. And different people coming at different levels, they have different levels of compensation, and the compensation is usually broken down into salary, bonus, some stocks, and in our case, even some tokens, some coins that may appreciate in value if the ecosystem grows. So as long as you have those agreements in place, the agreements can be a piece of paper. It can even be verbal if you have very strong trust. But verbal agreements, typically after a couple of years, there's different people who remember it differently.
Translation.
There's memory bias. Yeah. So a written agreement, a one-pager may be simple, but you can do a 5-pager or whatever. Once you have those agreements in place, you can work together. And if you and unless you get into arguments all the time, which we haven't. We have always treated our team members, some of them we call employees, some of them we call contractors, some of them we call other things. But we always treated our team members well. And at a certain size, today we're 7,000 people. People join, they ask a few other guys. We have treated all of them well. So today it's much easier for them to accept. Okay, I'm just gonna. We have contractors that just get paid in BNB, and we have a very simple contract, but they do really good work for us. And then later on we say, oh, why don't you join the team and we'll give you some equity and some stuff like that. So that hasn't changed.
No. Okay.
But on top of that, do you call it a employment contract? Do you call it a company? Do you call it all those other labels? Those I think more and more people don't care about them that much. And today organizations are much more international. And the tricky part is now the labor laws in different countries are very different. Yeah. So you need to treat them. You need to be very careful that you don't violate the labor laws. Some countries you can just let a person go with giving like 2 weeks notice. In Europe, it typically much longer. So you got to be cognizant of the difference, and it causes some problems as well. Like some countries are high bonus based, some countries are high salary based, and then the high salary guys already getting a high salary says, hey, they got so much more bonus. Why? But you're already higher.
Right.
So you get a lot of those
total compensation. It becomes the conversation across everybody, right? It's like your total equals that total.
Yeah, and then the culture differences. Some some people finish work at 6 and don't want to touch their phones again, and some cultures,
But some countries have laws on this stuff, right?
Some countries have laws on this stuff too. So you got to be cognizant of those practical issues.
That's why you went to France, right? I mean, you take one of the hardest labor countries and then they nail it down, and then you can, and then the path is probably easier going forward in Europe. Maybe.
Yeah, I think in a way you guys are, you and another, and I would say even a handful of companies who have been born in the last 5 years, and the way that you operate, you are sort of in a way, you're the tip of the spear that's breaking open how these models can work. So in a way, you will take a lot of pain, and then others who will follow you, it'll be a little bit easier.
That's good.
So you can say you're welcome. Growth and scale. I want to sort of maybe first question, and this is sort of like setting the ground so everybody understands. Help us understand. Help the audience understand at what scale you guys are operating. You mentioned 100 million users, but I want them to get a sense of that, and then I'll follow up with a question that has to do with that. But give us a sense of the scale that you are operating at now. Yeah,
so employee-wise, we're 7,000 people globally, and that's a small team, to be honest, for the scale of business we do. We have about 120 million users today, and in 2021, our platform transaction volume was $34 trillion. I believe we hold.
We all
more,
just take a breath. 34 trillion, yeah.
I believe we hold more user assets than any bank in the world. Almost any bank. I don't know all the banks. So because we're global, we take a little bit. No, we hope we have bit of users everywhere. So people very often mistaken that we're crypto is still a niche area. But if you look at, but it's a niche area in every country. But now, collectively, because they're global platforms, so our size is not that small. So that's kind of
so there's scale.
Yeah.
So in that, you're at this phase then where actually growing the market is as important or more important than adding individual users. How do you balance between? Because I would think to grow, you have something other than just sign people up. You have more like make it bigger.
Yeah. So that's very much the case. If you're lucky, well, we're very lucky enough that we're the dominant player in this space. So for us, taking market share away from a smaller exchange, it doesn't move the needle for us. Maybe we'll grow by 1 or 2% or something like that. Today, if we can help grow the industry by 5x or 10x, we will grow pretty much proportional with that, and that's hugely beneficial to us. So we spend a lot of, while the small exchanges typically like to carve out users from us, we like to focus on the bigger market. But at the same time, we got to be very programmatic about it. There's a couple of things. There's high demand for this new technology, which is good because we're post-internet. Information spreads very quickly. People learn about this kind of things, but there's also high resistance. So the existing financial services infrastructures are there. Many of the regulators are still skeptical about this technology or industry. We need to do a lot more education. But I think things are changing very quickly as well. I think overall, globally, we're looking at somewhere between, depending on how you calculate, what number you calculate, somewhere between 1% to 5% adoption. Adoption is usually exponential. So when in an exponential growth curve, 1% is usually the half mark.
1% of the world's population.
Of the world's population. Yeah. So that's different. Like if we calculate how of the world's population, how many people have ever had any kind of crypto, it's probably close to 5%. But if we talk about
that's quite a lot. Actually.
Yeah, it is. Yeah.
I think if you grab 100 guys on the street here, more than 5 people would have some kind of crypto, but that's usually a small percentage of their net worth. If you talk about net worth penetration, it's usually a much smaller number. Yeah. So somewhere between there. But when you reach 1%, it's usually a half mark in adoption. Because if you double every year, the next year is 2%, 4, 8, 16, 30, 64 very quickly. So. So yeah, I think we need to do a lot more of that. So that's why we are one of the few platforms that have a very large educational platform. We historically have not done very well on public relations, government policies, think tanks, this type of stuff. So we're increasing. We're not very good at that. But now we're increasing our investments in those areas significantly.
Yeah. What? So we had Web 1, 2, now Web 3. So what are the strategies that you'll deploy to grow that market and to make Web 3 become the the dominant space for new business development?
Yeah. So to be honest, in my view, the only thing we need to do is education. It's a fantastic technology, and it's a technology that if people don't embrace it, they'll be left behind. So we're in a very fortunate situation where this is going to be a hugely explosive growth industry. We just need to get the education out there. Today, many people have misconceptions about our industry. So that's unfortunate. Internet had a little bit of these problems, but much less. But we're talking about money now. We're talking about finances. So there's a lot more pushback. There's a lot more negative narratives from traditional mainstream medias. So we just got to get the information out there. This technology is neutral. This technology is never a criminal. There are criminals using this technology, but much less, actually, much less than criminals using traditional money now. There's many good people using this technology. There's tremendous benefits. You can help local economies. You can help local entrepreneurs to raise money. You can help local artists to sell their art globally using NFTs. You can do global investments. You can. There's so much more things you can do with this technology. So it's just a matter of education.
Is there a misunderstanding about the technology as well? Meaning, people look at blockchain, they look at sort of the way that how it intrinsically operates, and they say, well, you're not going to run your instant bank transactions on that, and you're going to bring it back to the blockchain, and you're going to reconcile at some point. Do you think that they understand that correctly, or do you think they misunderstand that?
I think there's still a lot of misunderstanding today. I still sometimes meet with regulators who think blockchain addresses operate like bank accounts.
Right.
They think that every address should be verified. Like I can generate 1,000 addresses in a second on my own wallet. Some guy can do it, and no one's going to verify that. So there's still some very fundamental concepts which are not even understood. So I think we still have a long way to go on the educational front.
Yeah, and understanding that everything is actually logged and traced. They don't always understand that. Yeah. I had to, I was very selfish in one of the questions I wanted to ask you, which was as Web3 explodes and expands, one of the things I think is a great byproduct or a beautiful thing that's come out of it is the ownership economy. The expectation that if we're going to participate with a service or anything, we should somehow get something back from that. And I think that's been born from, blockchain made it possible in tokenization. So now we're in this place that's, you start a company and people are like, well, why would I choose the company that doesn't give me anything when I could choose the company that might issue me a token for my behavior? Do you think that's just going to keep going further and further than it has?
Oh, yeah, absolutely, for sure. So this is one of the aspects many people still don't understand why people issue tokens. And this is why also one of the reasons why this token economy is going to be hugely impactful. When you issue the traditional business model in Web 2, you have before Web 3, you have shareholders or investors who become shareholders, and then you have the company that have users. The user pay the company, and then the company gives the profits to shareholders, and that's like a one-way street. Typically, there's a small number of shareholders, so they're not mass users. Yeah. In Web 3, it's very different. In Web 3, you issue a token. So take Binance for example, right? We issue a token, BNB, and we do an initial sell, and we got $15 million equivalent in Bitcoin, and that's our reserve for growth. Guess who bought those tokens? Most likely our potential users, and because those tokens will get a discount when they use that to pay for fees, they have the other they have other utility in the ecosystem. The guys who buy those tokens are your users. So now we don't have the traditional VC investors, just the platform, the company, and the users. And when the platform grows, let's say the user can get other users onto our platform, then there's more demand for that token. The token price increases. Now the users who are using our platform more, if they use our platform more, the trading volume increases. There's more demand for those coins. The value of those coins increase. They benefit directly by our platform growth. So then that creates a super tight ecosystem. It's a closed loop. The more they use your product, the more they use your platform, the more actually they benefit. And that loyalty, that stickiness is super strong that you cannot do without tokens.
But that's great in a growth. If you're in a growth trajectory, right? Yeah. If it starts dipping, it can also go very fast down because then everybody is engaged and will get engaged in the downward spiral as well. So how do you mitigate that and going forward with many more companies, not only companies, organizations, initiatives, endeavors, kind of becoming, going into this kind of more ownership economy? How do you manage the downturn as well?
I always strongly do not recommend entrepreneurs to issue coins at the beginning. The time to issue coin is when you want to scale. So initially, I always recommend people to raise some money from VC investors or family and friends, find the product market fit first. So you got to try different models. Once you have the product market fit, then you say, okay, we have a sticky product. Every user that we bring in, they result in 2 more users coming in. When you have that positive, what do you call stickiness or negative churn, and that's when you want to scale.
Yep.
When you want to scale, issue a token helps. So then the risk of generally, hopefully, things will not go this way. So token should be a scaling mechanism, not a discovery mechanism. Discovery is really bad. If you issue a token, you typically have a white paper saying, well, this token is going to do stuff like that. Guess what? If that product doesn't work, nobody uses it, and this token is dropping in price, you want to change it. After you issue a token, it's so much harder because you have to change the white paper, impact the token economics. Trust is gone, impacts finances. Somebody will lose money somewhere, and you get a lot of complaints. So don't issue tokens before you have product market fit. I actually only understood this, in this recent couple of years. When we first started, I didn't fully understand it. Yeah, and also people use tokens for initial incentives to bootstrap. So once, say we have product market fit, but you got to get the initial user base in. So you say, okay, the early ones, when you use our products, we'll pay you in tokens. So this is like play to earn, whatever to learn or to earn. So you use our product, we'll pay you for a while, and then this way people many of the people come in for that financial incentive. But once you get enough user base, then you can reduce those or remove those, and then other people keep coming in, and then you have liquidity already.
Do you see capital strategies evolving as well? I mean, do you see new ways of funding? If I would be a startup founder today, would you advise me to do something different than you would have done like this 5 years ago?
Yeah, so I think if you're an entrepreneur today and if you're not looking at tokens, you're missing out 10x. Like you're reducing your chance of success by at least 10x. So you're only looking at 10%. You're looking at the bottom 10% range. So I think for entrepreneurs, it's no longer an option not to look at token economics. So today, in the Web3 space, any project with a decent founder, with some reputation, with a nice team, even pre-product, they can raise $10-20 million. If you compare that to traditional VC fundraising, the first round may be like $1 million, the next round may be $5 million, and each round is like 6 months apart. So by the third round, it's like you may raise $20 million. And guess what? If there was another equal Binance team doing that fundraising, that company will not exist, because we raised $15 million in 2 weeks, and we never had to do another fundraising. I never had to spend time talking to investors. We just focused on our product.
This is also interesting because it's quite distributed. Like crowdfunding, tokenomics end up being, it's not one person who wins or loses. It becomes distributed amongst a lot of people, and so actually the risk levels are somewhat mitigated depending on what they buy into. We probably could sit and talk with you for even longer. I want to be mindful and respectful of your time. We did have a couple of questions that came in from the community, so maybe we'll pick one of those. And it was a bit about, like, take any country. You can pick the Netherlands you like or any country. What do the nations in these borders, these human-made borders, what are the things that they can do, or one or two things that they could pick to say, hey, look, we now have a better environment that could be partner well with sort of the direction that this is going?
Yeah, so again, this technology is not against any nation, any borders, etc. And it's just a very strong opportunity for a strong future growth. So any country, any nation adopting this technology early on and in full will have such advantages in terms of developing this economy, and they will have global impact. So we talked about the borderlessness of blockchains. So you could have a company in Netherlands servicing everywhere in the world. It could be metaverse, it could be GameFi, it could be NFTs. You have a platform here like that service all of the world. The countries that adopt this early will typically attract the local talent pool, the entrepreneur economy, the local talent pool, and the industry. And if you look at some industries like the internet, right? Today, most of the internet that we use are from companies in the U.S., right? So if you do a Google search, click on an ad, that revenue goes to the U.S. most likely. And if you do Facebook, Twitter, they're all U.S. companies. And if you look at the world's most valuable companies, the world's richest people, they're all that same group of guys. And today, in the future, the world is actually more international because the technology has less borders. So you could have, a wallet service provider that's sitting in Netherlands and that can service most of the people in the world. There are more regulations in the financial space. KYC, AML, etc. But nothing to say that a Netherlands service provider couldn't service people in other countries. And this blockchain Web3 is a core fintech. So we're seeing many countries adopting this very strongly now. The leaders that have understood this impact are adopting this very strongly. And in larger countries, we see some divides among the senior, leadership, senators, etc. Some of them want to protect the currency. Some of them understood that, their country becomes strong because they adopted innovation. So that we see some debates still. But eventually, innovation always wins because as humans, we push forward this technology is used by now a few 100 million people at least. So there's no way to shut it down. There's no way to erase the concept from a few 100 million people's heads. It will just continue to evolve. I think the countries who adopt this early will get huge advantages.
Well, final question we always ask everyone. You're speaking to a group of entrepreneurs, people that went out to build something or trying to build something. Any words of advice you want to share that says, hey, look, guys, whatever you want to share, it's yours. The floor is yours.
So it has to be in your personality. You have to enjoy it. You have to enjoy what you do. Otherwise, you have to be passionate about what you do. And also what you do have to have meaning. I actually only figured this out much later. If you just want to make money, you usually do not have enough enjoyment or passion to last through all the roadblocks that will be in your way. So you have to have a slightly higher purpose, which maybe not save the world, but a step above just making money. And other than that, I would say just manage risks. Very high rate of failure. So don't push all in. Don't scale before you have product market fit. Don't scale before you have that negative churn. Meaning that if you get one person, they will get more people, and try small experiments to discover that first, and then scale. So those are the advices at a very high level. There's so many things we can talk about. Yeah.
And then there has to be. I know. And sorry, you triggered a final question. Then, your purpose. What you said, you discovered it as you developed. I assume that first was also developing something with a team, and the growth itself was super exciting. And what was the purpose that you found in this process?
Yeah. So at the beginning, look, I think just before I was starting Binance, I kind of reached financial freedom at a very minimal level, right? If I keep my life pretty simple, I probably okay. But I was still pretty young. I couldn't retire on that. And the next step is, okay, how do we take care of our team? And then we started Binance. And Binance, we got so lucky. We grown so quickly. We didn't have the intermediate stages. We just went from this to almost that. So, and afterwards, after a while, we realized, okay, theoretically on paper, we should be pretty well off, even though we don't have a lot of cash. But then money is no longer the bottleneck. And we could retire. If we retire, I could retire. I can sit on the beach all day long. I could play golf. But all of those things get boring very quickly. And then I realized what I'm doing is already the most meaningful thing I could be doing with my life, right? So we're helping hundreds of millions of people, hopefully billions of people, to have access to a better money, better technology. So we call increase the freedom of money. So we're providing access to hundreds of millions of people. And I get thank you letters from people, messages from people in Africa, in Latin, on a daily basis. So this is very, very meaningful. There's nothing else I can do that's more impactful, more meaningful for me. So I don't view it as work. I view this is what I'm supposed to do in this life. So when I wake up, this is what I do. When I get tired, I take a nap, I sleep. So for me, it's no longer about job. I don't care about rankings. I don't care about wealth rankings. Those are just opinions. I don't know. Those are just valuation opinions. I don't care about all this competition. It's no longer about it's just this is the maximum I can do. This is the best thing I can do. So I feel very lucky to be in this position. So for me, so that's why I think many people ask me why you're not you never look stressed. When I'm stressed, I take a break, and after the break, I'm back. So I'm usually not stressed about it. So for me, this is the most meaningful thing to do, and this is the most impactful thing that I think has huge impacts for many people. That's meaningful enough for me. Yeah.
Yeah, I bet it is. CZ, thank you very much for spending time with us and sharing your insights with our listeners, and wishing you all the best also in your establishment here in the Netherlands. And I hope that we will see much more of you in the future.
Thank you for hosting me. It's a pleasure. And yeah, thanks for listening in.
All right.
Bye-bye. Thank you for listening to The Scale Lab, a podcast brought to you by TechLeap. We hope you enjoyed this episode, and if you did, please share it on your network via social media and give us your feedback. See you on the next episode.